What's up, Crypto Crew, and welcome back. Or if this is your first time, I'm Captain Crypto Might, actively escaping the matrix, scoping out the crypto ocean. So if you like your odds, get on the boat, stay up to date, thumbs up, and join the hunt.
Into the boat!
Crypto Crew, I've come to realize Kaspa is a true cryptocurrency and a digital asset. And like all assets, Crypto Crew, you need to protect your Kaspa. I will continue to encourage you to store your Kaspa offline on a cold storage. My personal favorite is the Tangent wallet. Plug and play, great way to practice self-custody and the most affordable out of all options. So if you wish to order your Tangent wallet today, you can get 10% off, link in the description box below. Thanks so much for your consideration and support in advance, and may the Lord Jesus Christ bless you all.
LMD Ghost fork choice. So the latest message-driven, greedy, heaviest observed sub-tree fork choice rule is an adaptation of Ghost, which was proposed by Jonathan Sampolinsky and Aviv Zohar in 2013 to a proof-of-stake context.
Crypto Crew, Kaspa made an appearance at the Crypto Expo EU in Bucharest, Romania, and on stage was John Lee, who also had some major interesting comparisons to make. Take a listen, Crypto Crew.
I want also to touch a bit on Ethereum because I do think Vitalik is a great guy, not just because he made EVM, but also he sticks with the spirit of trying his best to do decentralization. By the way, Vitalik and Ethereum Foundation also cares about the hardware requirements and the level of decentralization, all factors, and so on. And what he shares with Kaspa's research team is that we all think we can't trust on the the humankind nature, but we think promoting competition in game theory from economics is a better solution here. What the Ethereum strategy is that they try to use Ethereum as the only layer 1, but to outsource computation and execution to layer 2s. And this seems to be a good solution, but I challenge it. I think it doesn't work. The reason is because these L2s, their services are much centralized, and Ethereum cannot do anything with it. And I prepared quite a few different examples for this, right? Because comparing to the potential 51% attack you will see on Tron or Solana or Sui, because we only need like 50 or 20 people to do that, then on Ethereum, the problem is that they have no control over what the layer 2s are actually doing. These things can be rug, the issues can be outage. This happened with Arbitrum. And things can be higher rollback rates, which means that people are rolling back transactions for their own sake. And this is not always about justice. This is about fairness, right? Because if I got something stolen, people won't roll back the network for me. And this is about the MEVs, about arbitrage, about sandwich trades, about liquidation, and ultimately means reduced fees for layer 1s. And here are the evidence, right? You see Arbitrum is an outage for about 24 hours, and that also happened to Solana before. And the ZK Sync, which is the one on top here, is also a famous Ethereum layer 2, had a lot of, almost all DeFi projects on ZK Sync rugged. Okay, the DeFi, the X-Bank, the Carnegie Finance, everything rug pulls. And Ethereum cannot do anything about it. And this is the chart where you can see the transaction revert rates since February 2024. You can see the rollback rate significantly increases when Base and Arbitrum and Optimism, all those L2s are getting popular and making transactions there because they will do rollbacks just because they serve their own interest. It's just like the recent Bybit incident. If we got stolen for, let's say, $5,000, nobody will roll back the system for me. But if Bybit or these people or potentially the layer 2 operators or sequencers, if they want, they can roll back whenever they want to. And this is about the on-chain profit. It's about the centralized sequencer that is run by each of these L2s. You can see on the bottom half here that people are saying Base have been collecting 110 million sequencing fees for the previous year, while only giving back $10 million to Ethereum. And the reduced fees for L1 means the consensus is undermined, and therefore the security is compromised. And you can see here, right, especially after March 2023, the on-chain fees are going high on L2s, and that is always happening. So now back to Kaspa. I want to use this as an example, right? How we deal with sequencer manipulation, how we deal with sequencing service that is manipulated by L2 or centralized operators. The answer we offer you is that we think competition solves this problem. We think that more blocks means that people have to bid for your transactions to be included in their blocks, and therefore that increases fairness for everyone. The design we have is that, for instance, if there is a, let's say, miner that wants to include a transaction in one of its blocks because they think ordering this block in a specific way can make them some money, let's say a sandwich trade for themselves, then to make sure they get this block included, this transaction including their block, they must kick back this money, at least part of it, to share the money with the users, right? Think about it. For Solana or any chain that you only have one block on the chain, and if this block wants to order the transactions in whatever ways he or she wants to, they can just do it without asking you, because now, in whatever ways, elected or staked, now they are the leader and they control this round of sequencing. However, with 10 blocks per second, it means a few things. It doesn't just mean that miners don't have the time to check on what's in this block, but also they have to make a quick decision to decide which transactions sent by wallet or users they want to include their block, and decide to give a cut of their profit to kick back to the users. That is to say, originally the money was exclusively held by miners or searchers or block sequencers. For instance, they can get $200 from this block, and now they at least want to share, let's say, 100 or 150 with you, and we see that is an extremely good thing for common users. How does this happen? As we said, the sequencers will compete for transactions, as you can see in this table. But also we say this is just one example. For instance, when coming to Oracle service or data service source, because if we are trying to run on some off-chain data on-chain, we need some Oracle service providers. It's actually the same logic, right? This is the same logic across the history of crypto and blockchain, that you want to have more decentralized network so people can compete for different things. And therefore, this only matters and only can happen on Kaspa, because now you have more blocks. The comparative with Ethereum and other chains is like this. They want competition to happen on some other levels. They say, let the competition happen on L2s. Or they may say, let the competition happen among exchanges or different kinds of DeFi products. And we claim, on behalf of Kaspa, is that this competition can simply happen on layer 1 among the blocks. You don't have to outsource it and to believe that L2s or other centralized sequencers will do you any good and run that competition in a fair sense. So this is a very simple story I present to you here, is that 1 BPS in a second unit means that you only have one bidder and there's no competition, and that is a malicious, centralized, monopolized status of market. When you have 10 BPS, you have 10 bidders, so you have some competitions. Theoretically speaking, there will still be potential colluding malicious nodes, but to be fair, that in a second time unit, this is unlikely to happen, but that is theoretical. And Kaspa team is also pushing for future updates to make 100 BPS alive, which means there will be 100 bidders, and that is near fair competition for the market. And therefore, by then, the nodes must share the income with users. Whatever this income is sourced from, right? It's sequencing fee, it's Oracle service fee, whatever it is, it has to share with the one who sends the transactions. And this is what we think that empowers the users of Kaspa, and that's the spirit of the blockchains. The next question is, how much money we are talking about? How much money that we claim and we allege those layer 2s and centralized sequence have taken away unfairly from us? And this is just, again, one use case of centralized sequencer taking from MEV incidents. The Ethereum cumulative MEV boost rewards is $1.4 billion US. And this is not counting in what is collected by L2s, right? Because if you look at the news, Base Chain just offered less than 10% of their sequencing fee back to Ethereum. So I would argue that maybe L2s collected 10 times more than this. There are 32 more layer 2s like this on Ethereum. I know not everyone is as big as Base, but there are 33 more Ethereum L2s. And there are 37 more L1s, at least, based on what I can observe on the market. It means at least about 1,000 times of this money that should have been going back to decentralized sequencers, or at least a part of them should be kicked back to users who send the transactions, who allow the sequencers to exploit them by reordering their transactions. And that is why people should care, and that is why this allows people to generate more income with more blocks. So to summarize, what do more blocks bring, and why I say more is just better? Because more blocks means you have fair competition. Competition allows us to make some money. And I almost forgot about this question, all right? Because I would say if Justin from Tron is here, he won't like this idea of Kaspa because he's one of the 27 supernodes for sure. But the question presented to almost all of us here is that, do you think you are the one of the 27 on Tron, or you are the one of the 105 on Sui, or one of the 1,000 on Solana, or one of the 860,000 potential block diggers or miners on Kaspa? I think that answer is quite obvious. When we firstly have Bitcoin and Ethereum, we were thinking of empowering people and giving people more equality and giving people fair chance of trades and to have them entitled to the right of owning their own network and assets. The question and the problem we spot today with Kaspa is that this is not happening with other L1s. Therefore, if you believe that you are not going to be one of the supernodes, then Kaspa is a network that you should pay attention to. It's not just about, oh, come and buy some Kaspa, but this is really about re-examining you on why you stick to the crypto and decentralized values, and is there actual a network that can help you do this to protect you and your assets and your freedom. I think more blocks means more transactions. More blocks also means instant confirmations. We have a lot of users and active wallet addresses. The highest daily volume of transactions we proceeded before is 16 million transactions per day. Our numbers any other chain with no errors and with no interruption of the network. We have about 260,000 active wallet addresses, and I'm not exaggerating. And they are very active, and we have a lot of merchants that already accepted Kaspa as payment because they believe that Kaspa is some assets that can be protected and by decentralization. This also means more income for users. Even if you're just someone who holds Kaspa and sends transactions on the Kaspa network, as I just explained to you, that the sequencer now needs to share the revenue with you, and therefore you will get more money from there. You will at least receive a better slippage rate when you trade on DEXs and Kaspa and so on. We are still working on things like 100 BPS. I think that will be remarkable, even as a recognition from the industry. It means that this is literally the most secure and most decentralized work, and almost everyone, even if you have the smallest miner, you can get a block reward and you will be incentivized to join this kind of network. So with all that said, that we hope people here can rethink why decentralization matters, and to just go home and check if other chains are delivering their promises of decentralizing themselves, and then come back to decide if they should be the next one to join Kaspa.
Don't take our word for it. Do your own research. Look at the development model and the project's vision, and most importantly, think long term. If you're ready to join the Kaspa community, check out their public Telegram group, follow Kaspa on X, where you can see all the development discussions in real time, and that's a great way to stay informed and get involved. Prove all things, hold fast that which is good. Let us know your thoughts about Kaspa in the long term, but also Kaspa during this 2025 bull run in the comment section below.
Stick around.
Fix your mind before you get to the grind. And with that said, let's continue to escape the matrix. Let's continue to be on the lookout for the next big thing here on the crypto ocean. Grow in grace, and let's make some crypto waves. Say I.